Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, January 30th, right after the markets close. Well, another huge batch of corporate earnings, including from mega caps Alphabet, will test the market in the coming week after a disappointing report from heavyweight Microsoft weighed on equity indexes earlier this week. Wall Street will also focus on the monthly U.S. jobs report due on February 6th. In the past week, the Federal Reserve pointed to signs of stabilization in the labor market as the U.S. Central Bank paused its interest rate cutting cycle. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Excuse me, of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now today, you can see over here, the SPY closed at $691.97. $691.97. Just below the highs that were set this week. Actually, it was Wednesday earlier this week at 697. So we're trying to get up there. We're trying to poke a little higher here. Price right at the moment, if you can see, it's a doji here. It's sitting on top of the red line, the 20-day moving average. Which is right under price here at 690 and change. The 50-day moving average, the green line, is coming in at 683. And down here, our other moving average is the 200-day moving average, which is coming in at 641. So we know that, and you can't see it on this chart, but if we could see April lows here, that of course every asset had April lows. If you could look back here at the April lows, you can see that the SPY has been walking up in a glorious uptrend. Its 20-day moving average ever since last April lows at 481. From there, it's climbed in an uptrend, mostly above its 20-day moving average, making higher lows and higher highs until it hit this October high here. That was at $690. And from the April lows in that uptrend all the way up to here was a 44% rise. So for over 10 months, that's what's been happening. And it's been absolutely amazing. I can say that. I've been in the market a long time. So it hit the October highs here at 690. Again, that was a 44% gain from the April lows. And after the October high here, you can see it was starting to falter a little bit here, a tiny bit here earlier in October. It made these highs at 690. It fell down to the 50-day, came back up, then really lost some power here. Falling to 652 in November, just a couple of points actually below that October drop there. So it fell to 652 in November. Then it gained energy again, marched right up above the 50-day, the 20-day, and pushed up higher here to 689, coming close to that high, but couldn't quite make it. Dropped again a little bit, then kind of walked up here its 50 and 20-day moving averages to where we are now at 691. It's actually about 692 where we are now. So we can see here, we can draw, and I can actually put it from down here, but I'll just do this. We've got this trend line here. We've got a channel line here. So it's huffing and puffing right now, doing the best it can. And of course, now we're smack dab in the middle, or going to be very much in the middle of fourth quarter earnings season. Resistance here, so if we need to know these levels. Resistance sits at 697. Support, tiny bit of support here, we can say at the 20-day, excuse me, at 690. Then we've got the 50-day here again at 683. We've got this little pivot down here at 678. We've got another one at 671. We've got these November lows at 652, and of course, if we need it, hopefully we don't, we've got the 200-day moving down here at 641. So is this uptrend getting a little tired? I hate to say it, but I'd be amazed if it isn't, because this is the strongest market, one of the strongest markets that I've seen. And markets move in cycles. They don't move straight up. There's got to be profit taking come in to kind of push it down and then grab some more energy again and start higher. So just get careful here. Next week on Tuesday after the closing bell, we have earnings from AMD. On Wednesday after the close, we have Alphabet coming out. Thursday after the bell, we have Amazon coming out. Whoa. And the jobs numbers again are going to come out on Friday. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100, an important index, the top 100 non-financial stocks in the NASDAQ stock market, including the large cap momentum stocks that we were just talking about, NVIDIA, Meta, Tesla, the whole group there. So the Qs closed today, if you can see here, the Qs closed today at $621.87, almost $622, still below the October high back here at 637. Now, the Qs are sitting right on top here of their 20-day moving average, coming in here at 622. The 50-day moving average is coming in at 617 and change, and the 200-day is down here at 573 and change. Now, we know that, and you can't see it on the screen, we know that since the Qs made the April low at 402, the Qs rallied from there, and like the SPY, walked up in an uptrend, their 20-day moving average. Now the Qs always falter a little more because these are the NASDAQ, these are the momentum stocks, and they are much more dramatic than the S&P 500 stocks. So when it moves up, it can fall down a little bit more, but still in all moved in an uptrend all the way up to the October high, again up here at 637, and that was a 58% move. So that's just incredible, really good. Now from the highs at 637, though, it's starting to get a little puckered out. The Qs dove to 581 in November down here. Technically, it was a tiny bit lower than these lows back here, so technically it broke the uptrend, but we can't, I'm not even going to worry about that because the Qs flew right back up and rallied to 628 in September, then fell down here to 600, then moved back up over the 50-day and the 20-day and just started consolidating here. Couldn't make any higher highs here, just started consolidating, dropped down a little, then actually rose back up here almost to their prior highs. For all the world, we can give it that much. It moved back up here almost to 637 to meet those prior highs, but couldn't get over that, couldn't keep going. So it dropped back down. So now we can give it, and this trend line here we were talking about last week, the channel line. I said that triangles either break out or break down, break up or break down. In this case, it broke up, but it couldn't keep going. So we'll have to see what's next. Again, our nearby highs here would be the resistance at 637. We've got support down here at 617. We've got 608. We've got 600. We've got 582. We've got the 200-day. Hopefully won't need it down here at 573 and so forth. Now, please know that we definitely have a very exciting week coming up. Sometimes maybe more excitement than we even want, but we certainly do. So please check in with your protective stops. Please do that. Our final chart today is a daily chart of the iShares U.S. Medical Devices ETF, symbol IHI. And before I get going with this, I just want to tell you guys something. Every week before I put up the chart on the one I choose, like this one, I go through 130 ETFs, and I did that today. I go through, I scan through, or not scan, I put up each and every one, 130 ETFs, before I choose the one I want, and for you all. And I just want to tell you that today I've noticed that many of them, not this pattern isn't the same, but many ETFs right now, which means the stocks, of course, is part of, have gone way, way up, and they're overbought, and now they're starting down a little bit. So I just want you to know that it's not a big negative, but markets do move in cycles. You can see some mini cycles right here on this chart. Markets do move in cycles, so be careful. The IHI doesn't move very much with the market, and I do think that at least in the long term, I think medical devices are going to benefit a lot from AI. So I'm curious to see the growth in that. And so that's another reason I chose this chart today. So again, we're looking at a daily chart of the iShares U.S. Medical Devices ETF, the IHI. It has 48 holdings, and the top holdings include Abbott Labs, Intuitive Surgical, Boston Scientific, Edwards Life Sciences, and the Stryker Corporation. And of course, as I've told you, I always give you these 4 or 5 top stocks so you can look at them individually and see if there's anything there that that's interesting. Now, when looking at this chart right now, the IHI closed today at $60.08, call it $60. It is down below its moving averages. They're layered overhead. The 200-day moving average is coming in here at 61.30, 61 call it. The 200-day is coming in at 61.95. I'll make it 62, and the 50-day is coming in here at $62.43. So there, the IHI, as you can see, has fallen down recently, but it's caught. It looks like it's caught here by support. Now you can't see it here, but I like to look at long-term charts before I get into something, and the long-term chart I looked at shows that you can't see it here. The IHI made all-time highs at the end of 2021 at about $66. Then it gradually dipped down to $45 toward the end of 2023. So now looking at this chart, we can see that in the last couple of months here, the IHI, excuse me, it's kind of been moving sideways here since July, August through summer, then came down here to 58 and change, then moved back up through its moving averages up here to 65, almost 65 at the end of December, then fell down to its 50-day, dipped for a day or two below it, then came back up and retested this high again, back at up at 65. Then it fell pretty dramatically here, down to where we are now at $60. But I've noticed going back, I've noticed that there's support. There always seems to be, or mostly seems to be, support here at around 59.60 for the IHI, even if you go back further. So looking at this, I'm thinking again that this may be, especially if we've got all these tech stocks announcing next week, medical tends to go its own direction. It doesn't tend to follow the market that much. So if in the coming week, and I see this candle reversed here, and there's plenty of support back here from October and even further back. You can see August. There's support here at 59.60. So in the coming week, if the IHI can stay above $59, that's what I want it to do. I don't want it to roll over again. If it can stay above $59, I will buy a small position of the IHI in my trading portfolio, and I'm going to put in my stop here at $58.75. If and when the IHI can rise up above this pivot here, if it can rise up above 63 and close above it, at that point I will add to my position, and my stop, of course, will be a trailing stop. So you may want to keep an eye on the IHI in the coming week. And now, as you all know, at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. We're going to talk about swing trading again this week. How to swing trade, because this is a good time to learn it. How to swing trade successfully shows you how to enter. Here we go, right here. How to swing trade successfully is one of my most popular programs. It shows you how to enter during upswings, and it would be like, say that, remember we talked about uptrends just a minute ago. So say the uptrend's going like this, so it shows you how to enter right as an uptrend, as an upswing, I should say, is starting. This, pretend it's a daily chart. Then take the sweet spot from this price move, and when it starts to weaken just a little bit, that's when you jump out. So you get the middle out of the Oreo, as I like to say, and then pocket your profits before price starts lower. You're going to discover how to trade with my Sleeping Tiger setup, which I use over and over, and I've taught it to thousands of traders. It really helps you make consistent profits. Now, our new low price for this program is only $187, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. And from our ever popular 7 Steps to Successful Trading, of course, how to swing trade successfully, trade the trend to profits. I love this one. How to read charts, great for novices and anybody who wants to brush up. 3 winning setups, great for short-term traders. And how to bottom fish like a pro. We might be doing that a little bit right here with IHI. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you'll have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.